Here's a thought. What if the biggest reason people lose money has nothing to do with bad luck, but everything to do with not knowing a few key words? Today, we're going to decode the fundamental language of finance. And I promise you, once you learn these words, the entire world of building wealth opens up.
And that's a really powerful idea, right? So many people think the markets are rigged or just plain evil. But the truth is, a lot of the time, they're losing money simply because they don't get the vocabulary. They're basically signing contracts in a language they can't speak. But what if you could become fluent in that language? Well, that's exactly what we're going to do right now. Think of this as your first lesson, your first real step towards financial literacy. And trust me, that's the real foundation of feeling empowered with your money. Okay, let's dive right in. We're starting with maybe the two most important words in all of finance: assets and liabilities. But before we get to that, we have to tear down a really common and kind of dangerous myth about what it even means to be wealthy. This right here, this is the trap so many people fall into. We hear someone has a huge salary or their business is pulling in tons of profit, and we think, wow, they must be rich. But that is often completely wrong. See, your salary isn't wealth. Your income is not wealth. Income is what you earn, but wealth is what you keep. And if you're not smart about it, that big income can disappear just as fast as it comes in. And this says it all, doesn't it? There was this incredible study of actual millionaires. And you know what they found? A lot of high-income earners were totally broke. True wealth isn't about the size of your paycheck. It's about how much of it you hold on to and, this is the key part, what you do with it. Imagine a doctor making 500 grand a year but spending 500 grand a year. Are they wealthy? Nope. They're just a high-income broke person. Now think about a teacher making 50 grand, but they manage to save and invest 10,000 of it every single year. That person is on the path to becoming wealthy. All right, here's the first word for your new vocabulary, and it is beautifully simple. An asset is anything that puts money in your pocket. That's it. If something is consistently making you money, it's an asset. Maybe it's a rental property that gives you a check every month, or a stock that pays you a dividend. It could even be a little side business. And then we have its opposite. A liability is anything that takes money out of your pocket. If you have something that's always costing you money just to own it and maintain it, well, that's a liability. Think about your car payment, your credit card debt, student loans. You get the idea. Now, this is where things get really interesting because it forces us to rethink things we normally consider valuable. I know what you're thinking, hold on, my house is my biggest asset. And you're not wrong, it can be. But, and this is a big but, if your mortgage is so huge that it eats up all your income and you can't save or invest anything else, then day to day, that house is actually acting like a liability. This one single distinction, made famous by Robert Kiyosaki, can literally change your entire financial life. So now you've got the core building blocks, assets and liabilities. Let's talk about the two invisible forces that are always, and I mean always, at work on your money. There's the engine that builds it up, and then there's the thief that tries to steal it away. First, let's talk about the engine of wealth, compounding. The best way to picture it is like a little snowball at the top of a really, really long hill. Let's say you invest $1,000 and earn a 10% return. Easy, that's $100. But here's where the magic happens. The next year, you don't just earn 10% on your original $1,000, you earn 10% on that plus the $100 in profit. That's an extra $10 your money earned all by itself. It might not sound like a lot at first, but over time that snowball just gets bigger and bigger until it's a massive, unstoppable avalanche of growth. You know, they say Einstein said this, and whether he did or not, the math is just undeniable. The most important ingredient for compounding isn't a ton of money, it's a ton of time. Time is the ultimate growth hack. Get this. If you start investing just $100 a month when you're 25, you could easily have over $1 million by retirement. But if you wait just 10 years and start at 35, you'll end up with about half that. That is the absolutely staggering power of time. Okay, so while compounding is your best friend, building you up, there's another force working against you, and that is inflation. It's the silent thief. It steals the buying power of your money quietly, consistently, every single day. Just think about how much a movie ticket used to cost versus what it costs today. That's inflation, right there, in front of you. And this chart, wow, it just shows you the damage so clearly. $100 back in 1995 could buy you a whole lot more stuff than it can today. In fact, that same $100 bill now has the purchasing power of only about 45 of those original dollars. So here's the crucial takeaway.
If your money isn't growing at a rate that's faster than inflation, you are actually losing money. You're going backward financially, even if the number in your bank account doesn't change. That is why it's so important to get your money into assets that can beat inflation over the long run. Okay, so you get the forces at play now. Let's talk about how you can use them to your advantage. And it all starts with adopting the right strategic blueprint, the mindset that really separates successful investors from, well, everyone else. And that mindset kicks off with understanding one of the most misused and misunderstood words in all of finance: risk. So many people think, oh, the stock market is just too risky. And yeah, sure, it can be. But you know what's way, way riskier? Not investing at all. Because if you do nothing, you are 100% guaranteed to lose purchasing power to inflation year after year after year. Most people think risk is seeing their account balance go down. That's not risk, my friends. That's volatility. It's just the price of admission to the greatest wealth-building machine on earth. Real risk, as the legendary investor Howard Marks puts it, is the chance of a permanent loss of your money. So if you invest in a great company and its stock drops 10%, that's just volatility. It's uncomfortable, sure, but it's temporary. But if you invest in a company that goes bankrupt, that is a permanent loss. Your money is gone forever. See the difference? One is temporary discomfort, the other is permanent financial damage. So how does a real investor think? Well, first, they have an ownership mindset. You're not just buying some random letters on a screen. You're buying a small piece of a real business. So ask yourself, would I be happy owning this entire company? Second, they think long-term. The stock market is basically a machine for transferring wealth from the impatient to the patient. And finally, they use systems. They don't just try to save what's left over at the end of the month. No way. They pay themselves first, they invest automatically, and then they spend what's left. So let's just take a second and recap. We figured out that wealth isn't about what you earn, it's about what you keep. We've uncovered the two invisible forces that are always at play: the engine of compounding and the thief of inflation. And we've learned what it means to have an investor's mindset. It's all about ownership, patience, and systems. Just think about this for a second. You now know the real difference between income and wealth. You get the simple but profound definitions of an asset and a liability. You can see the invisible engine of compounding and the silent thief of inflation. And you can tell the difference between real risk and just plain old volatility. Remember at the beginning when we said finance is a closed language? Well, guess what? You're not locked out anymore. You've got the keys now. Look, this isn't about chasing the latest hot stock or some get-rich-quick scheme. It's about building a solid foundation of understanding piece by piece. This is how you stop getting confused by the crazy headlines and start seeing the real patterns for yourself. Think of all those times you saw some expert on TV and had no clue what they were talking about. Yeah, those days are over. You now have the tools to understand the conversation and make your own smart decisions. So, the only question left is the one on your screen. You've just learned a powerful new language. The real journey, the real fun starts now with what you choose to build with this knowledge. So, what are you going to do? Will you finally open up that investment account? Will you start that side hustle you've been dreaming about to build a new asset? Will you just pick up a book and go deeper? The choice is yours. But whatever you do, please take action, because knowledge without action, well, it's pretty much useless.